Before we dive into the video, a quick word from our sponsor, TradeStation. As tape readers, we rely heavily on TradeStation for their time and sales. TradeStation offers ATC students an account representative, zero commission, and a cash reward with qualifying deposits. Now back to the video.
Purposes only, and nothing is intended as any type of investment advice. Okay, so in order to get real advanced, because after we're done breaking our trade, our 1 through 4 trades down, what we're going to do is work specifically on calculations in the live market, knowing how when we see prints, exact expectations to have that need to fit in order for something to be high probability. But we have to understand the key concepts before even seeing that going on in the market. And we can do that without actually using numbers. So we're going to start obviously with a number 1 trade. Now, why is number 1 through 4 1 through 4? Why is a 4 trade a 4 trade and a 1 trade a 1 trade? Why is 1 number 1? Why isn't number 4 number 1? That's it. It's time frames of your expectation. Okay, so number 1 trade is the quickest possible trade, statistically speaking, when we come in. Now, a number 1 trade, by simple definition, is what? Simplest of definitions. What is a number 1 trade? So it's short. It's a building trade. Okay, as prints way over print personality. Now we have to understand that print personality is going to play a huge part in every single trade that we ever take. What it allows us to do is really be able to analyze the positions that we're seeing relative to how trading is within that stock. Again, there's certain stocks where 10 prints isn't enough, when there's certain stocks where 2 prints can move the stock $10. So we have to understand that print personality in order to ever be able to trade. So the next part is increments. Oh, lost my mouse. There we go. So our increments. Now, what is an increment? What is an increment? We know how to figure them out because our chart does it for us. Whatever time frame we have in our chart, it's going to show us what the increments it's trading in. And that's really it. An increment is what an average position, how much monetarily it has to move, okay, or how much money that they have to make in their trade for it to be worth it based off of the personality of the stock that we're looking at. And like I said, it's so simple because our platforms do it for us. It's not something that we really need to do any special calculations with. Now, I'm going to tell you something. As you get, more screen time in, should you be at a point where you could look at a stock without even needing to know what the price are and know what the increments should be around? Absolutely. If a stock has a $10 range and we have to assume it's at least $1 increment. We want to start to be able to kind of understand that, because the more that we understand about a stock without needing a calculation to happen, the better off we're going to be, because it's just, we better understand it. Okay, but it's right on the side of our charts. And again, like I said, and I'll just show as a real quick example for anybody that doesn't know this, but all you have to do, whatever time frame you put in, that's what it's trading in. For instance, this is trading in $2. Okay, but if I really just take what happened today, it's actually only trading in $1. So whatever, if I bring more in, it's going to trade larger increments for the most part because of the fact it's a longer time frame. If a stock is in the afternoon, like right now, NVAX is kind of in a consolidation, it's really moving at about 50 cents. Overall for the day, really won. But again, our side of our chart is going to do that for us. Now, I want you to think about, what does a perfect number 1 trade look like? A perfect number 1 trade. Now, I'm going to start drawing charts now, and you're going to have to bear with me because I'm using, you guys know my paint skills, but I want you to see it in its simplest forms. What does a number 1 trade look like on a chart? A perfect number 1 trade. So that's not so far away from where it needs to be is not a perfect number 1 trade. We have to start with our benchmark of exactly what a number 1 trade would look like. Because essentially, once we get ask Prince above print personality, how long does a perfect number one trade take to then become a short? Perfect, because remember, we're basing this off time. The quicker something happens, the better off we are, because the quicker that our trade gets far away from where we need to be, the less exposure that we need to be into it, the quicker it's at our price to target, the quicker that the stock actually does what it tells us it's going to do, the better off we're always going to be. Okay, just think of it this simple. Okay, let's say a stock has a $2 price target and it needs to move $2. Well, what's better off for me? It moving $2 in 2 seconds or $2 over the course of 2 hours? What is better off for my trading or anyone's trading? The seconds, because it happened instantly. Perfect. We're far away from where we need to be. The stock did exactly what it needs to do. My exposure gets to come off. That's how I realize trades. Things happening now. Okay? That doesn't mean that you don't take a trade that just goes down or up for for 6 hours because it takes a long time for. No, I mean you still can trade, but the best trades are always going to be something that happens right away. Think about your biggest trades. For the biggest trades that you typically are going to take, how long are you in that stock before it starts moving far away from your entry? Typically very quick, right? You don't get your huge trades. You shouldn't be in it for 30 minutes in a consolidation right around your price target before it moves. So if we had to draw a number one trade, okay, it's going to look like this. Okay. Now, I don't care what the increments are. I'm just going to draw them. I don't care if they're 50 cents, 20 cents, okay, $1, $2, doesn't matter, because nothing is going to change. We don't need numbers to understand what a perfect stock looks like. Okay, so in this case, we'll use the high. Why do I like the high? Because what I'm doing right now is I want to draw a perfect number one trade. If every trade worked out this way, we would just, it would be 100%. Why do I want to use the high and not start somewhere here in the middle? Because obviously there's going to be stuff that happened previously, blah, 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 for a short. Yeah, why am I going to use drawing this perfect number one trade? Why am I going to use the top increment? Again, don't care what the numbers are. Why am I going to use up here? So again, our prints are going to have to start here because our number one trade starts from where our prints are. So it's not far away from where it needs to be yet. You guys are adding variables that have nothing to do with what we're talking about yet. Those variables come in later. We have to be able to understand what does a perfect trade look like. Well, why am I using the high? Well, because more than likely, if it's coming towards the high and we get our prints at the high, there's no information above it. Okay, if it's going up, how much retail is in the stock already? So technically, I would love to see a perfect number one, forget about prints yet, but go like this. You know why? Because I know retail is going to be here. I know retail is going to be here, right above these levels as they come in. It's giving retail more and more spots to be able to get into it. Okay, so now, in order to have a number one trade, by definition, we have to have S above print personality. Okay, so right here, and actually I'm going to draw it in green. Right here is where our asks above print personality come in. Okay. Now I'm going to say they're one increment, just for the hell of it, just for our example. Okay, but our S above print personality comes in here. A perfect number one trade is then going to go like this, down to our next increment. Does everyone understand why this is just a perfect textbook number one trade? Stock's going up, S way above print personality, and it continues on its way down. Okay, I know I put in there for for the upcoming class schedule, everyone needs to know your number 1 through 4. Okay, because we're not going to spend a ton of time, going over them specifically. We're going to start to understand other variables that are going to come into it. So now when I see this move down, S above print personality have to be at least 1 increment, right? Because technically S above, okay, above that print personality tells us how many increments at a minimum. Should be at least 2. Now, why is a perfect number 1 trade why am I only using 1 increment? Conservative, because I like to have a price target set, because what does our price target give us the ability to do? Price target gives us the ability to do something. It's not to get to that price. It gives us the ability to set how much we're willing to lose within a stock. It lets us define our risk. So a perfect trade, a perfect case scenario is a stock going further than what you have planned for it. In this case, okay, we will look at 1 increment. But in all reality, because it's above print personality, a regular number 1 trade should be 2 increments. Why does this thing keep disappearing? Okay, here we go. So in all reality, it should be 2 increments. Because by definition, above print personality means more than 1 increment. Now, I can't ever go wrong being conservative, but this is what it actually should look like, a perfect number 1 trade. Does anyone have any questions on this so far? Any questions so far? Okay. So now let's start to talk about variables that are going to be added into a number 1 trade. Okay, the one that everybody wanted to talk about is getting far away from where it needs to be. All right, I'm going to make them a little smaller just so we have some more. Chart is not to scale. Okay, so as we're coming up, okay, what happens to percentage of this number 1 trade if we continue like this? So now we're up 1 increment. And then what happens when we come up here? It's going to increase our percentage of our trade, because now it needed to pull back from this increment right here. Notice how we don't even need to use prices in this. Okay, price doesn't even matter. It's the setup. This is how market makers trade. So it doesn't matter what the price is. It just matters the increments that it's moving from. Have you ever thought, well, the stocks went about 40 cents or 20 cents? No, that's not a thought process we need to have. The thought process is increments. The increments mean everything, because the chart has to move a certain way. Why does the chart have to move a certain way for them to accomplish their goals? The chart itself has to move a certain way. Why is that? That's it. Okay, those patterns, the way the chart moves the way it does based off the way that they print, because they need it to look like that. They need to attract retail. Okay, and if you think about something on a building trade, define what a building trade is to yourself. Okay, well, what they're looking to do is get a lot of people in to then get them out. Okay, a building trade is I'm going to take a lot of retail money at some point coming up. So what happens the further it gets away? What happens the further it gets away? More retail. It gives retail the more chance to get into it. Okay, you got to think about something. How many guys of you guys have been there trading before, and you saw a trade, you didn't take it, but it kept going up. And you saw another trade, you didn't take it, and it kept going up. What happens about the 3rd time? What do you end up doing? You end up getting into the trade. You had 2 trades and you didn't take them, and now you end up forcing something at a higher point. Okay, everyone does that. You're not special in any way whatsoever. The way that we think, it's not special. That happens to everything. So you can't just have a stock. A stock going up one level is not going to attract a lot of retail. Okay, you can't attract a lot of retail unless it has the ability to go up, because you need multiple increments, okay, or an extended type of chart in order to even give them the chance to get in by the time they bring it up. Okay, because what gets a stock on a financial channel? I want you guys to really dig into how trading works. How does a stock get on a financial channel? Movement. Now, news, of course, if it's like, before the market, after the market, they're going to bring up, but it's really movement. And typically, really news and movement kind of go hand in hand for the most part, but it's movement. But think about it. By the time that CNBC or whatever, Fox, whatever financial channel that you're watching, by the time it gets on there, what's already happened? Yeah, it got on there because it's already been moving. So you got to think about it. Why did I draw such a large movement to become a number one trade, or the perfect number one trade? Now, this is going to be a higher percentage, but this is really what the perfect number one trade. Why did I draw so many increments going up? Why in my head is that a perfect number one trade? Well, it gave it plenty of time to move, get on those channels, get people interested in it, and get a ton of retail. So you got to think about something. Okay, if I start here, so let's say if I cut off this chart right here, okay, and let's say it only started right here, this red bar, okay, why is this now not a perfect number one trade? Why is it now not a perfect number one trade? Why is my chances of it going up higher now than hitting or way above the ask at print personality and coming down? What's the reason? Can you build if there's not enough interest to build with? Exactly. There's not enough interest. Because you got to think, if you're going to build, okay, your position's not going to be small. And if it's way over print personality, and that's just the tip of the iceberg, that means you're looking to build a large amount. So it doesn't actually give enough room starting here to get on those financial channels, to get that, that retail to click and see and come in to chase it. So now, if it starts here, what happens to my percentage of this number one trade right here working out? It's a lot lower. When if it starts down here, this number one trade is now a higher percentage. So it's not only we get caught up, we want it to get far away from where it needs to go. Absolutely. But do we ever think about what led up to it? Because it going up to a certain level, like in this case, starting all the way from this many increments, the more increments that a stock moves, the more ability it has to then take away from people. Because it creates more interest, it creates more people getting into the actual stock. So many times we'll see a stock that's got, that's only moved 50 cents, see great ask prints, and then wonder, well, why didn't it pull back? Well, because there's nothing to pull back to yet. They told us they're going to build. That they're not lying. Prints don't lie. So when they told us they're going to build, they didn't necessarily tell us they're going to build right this second. They can build right this second, but do we ever look what happened previous? Did they get enough interest to get in there and then start the building? Well, a real easy rule of thumb is when we look at our chart here, the more increments it's actually moved up, statistically speaking, the more retail that has to be in it, because that's how retail trades. What's the range of these percent differences? Well, it's, in this case, because we're using, we can do that with specific numbers. In this case, it would really depend. Because if this is trading in 10-cent increments, then, did it have a ton of time to really move? Not really. If it's trading in 50 cent, there's a lot more time. There's a lot more that's going to go into this. Think about it. What we're doing right now is we're understanding it in the simplest form. And then from there, then we can start adding percentages that are coming in. Because then also, we're going to start talking about prints in a second. Because at the end of the day, this is just based off one set of prints. Aren't there other prints that are going to help us make decisions? And we're going to have to know where they're going to be looking from, and we're, so on and so forth, which we're going to get to. This chart implies that the first market maker in this big move up, right? It doesn't really matter. There could be a market maker that started down here. There could be one at this increment. There could be one at this increment. It doesn't really matter. Okay, because if there's some market makers in here, this is the first time. This is where we saw our number one trade. Without prints way above print personality, can't have a number one trade. So up until this point, we didn't get something that showed really needed to build. This green right here is where that started. Now, guess what, Matt? Think about it. Let's say there was, what is going on? This thing just disappears sometimes. So I want you to think about something about your question, Matt. Let's say there was a market maker right here, or right here. Think about this trade now. Think about this number one trade right here. What happens? Now we need more selling to make the move? Not necessarily. Because if we did get above print personality at this spot, what actually happened when we saw the prints up here? More predictable price target, or percentages goes up, because guess what? Now it's way far from where it needs to actually be. See how that works? So in this case, it literally, all that's happening is it's giving you a higher percentage, even if they are down there, because now they're just creating what happened up here. This move coming up is the same thing as down here from this move coming up. So now we're far away from where we need to be. A perfect time to spark it. Okay, and if they said they needed to build here and here, the more the increments that it ends up going up, the higher the percent of our trade is going to be once we get that trigger back to the downside. So you're just adding fuel to the fire for this trade up here. See how this works? So let's talk about prints for a little bit, okay? For a number one trade that has now broken past here and is getting further away from where it needs to be, I already have an expectation of what I need to see print-wise. What do I want to see up there in order for my percentage trade to be high? Because right now I already have about a 70% trade, right? Just based off, we're assuming a 10% trigger, and the prints alone, we have our 60%. So we're talking about a 70% trade here. What do I want to see? Now, no new buying. Do I mind longer term buying? Don't. So if I see some longer term buying coming up there, beautiful. Just fitting into our game plan for the number one trade, the person that we're following. Okay. What else? And so now here, this is where we start to add variables. Okay. But I do want to start to see some short-term buying coming out, short-term buying coming out. So that doesn't mean I need a lot of selling, or what I'm looking for, a lot of selling. But if the stock's moving like this, in this straight pattern towards that upside, and we're going to be looking for this number one trade, right? Okay, and it's moving into this pattern, it's just slowly, just continuously going up. I want you to think about something. Is there any way in hell there won't be shorter term market makers that are making moves on these increments? No. So let's get a little bit more advanced now. Of course they're going to be making money. So I want you to start to think about something. We did a podcast talking about different market makers. We did a traders exchange where we were talking about the different market makers within a spot. So really, what do I want to see? Because a stock getting far away from where it needs to be at any point, a trigger now is going to be acceptable, right? So looking at these, at any point, we have to be ready for a trigger. But do we calculate how much the last person needs to make? Because if we have short-term buying underneath the increment where we got this, the big green mark right here, and we got our prints way above print personality right here, okay? What about the buying under it? And what about the buying above it? Did we see shorter-term prints coming into it? Because what happens is a shorter-term market maker, okay, we have to think about market makers as it's not one market maker's better than the other. There's market makers have different game plans. One person might be looking to make a trade now. The other market maker might be looking to build or really control the stock, a more dominant type market maker. Okay, but they're both working in that same spot. So what I want to start to see is I want to pick out, okay, the best short-term position that I've seen. When I look for a number one trade that's getting far away from where it needs to be, I want to pick out before those prints came in, preferably. I'd rather them not happen after as a reaction. I'd rather it happen before we get our prints above print personality. Okay, but I want to pick out the best short-term trader I saw and decide how many increments they need to make. Now, why do I do this? Because once that short-term person has made their money, what is a better spot to look for them to now bring it back down? Remember, market makers are under the assumption that every single market maker is always going to be correct. So if I see short-term buying coming into it, that doesn't mean that because this person showed Bill that they're wrong, but it should match up to where that shorter term person, I can see them scaling out or getting out of a position for the building that's going to come. So it allows me to almost calculate the extent to how much gas is left in the movement of that chart. That short-term buying that says it has to happen now is what gives us that gas to continuously push it up. So what number or what increment is it now the gas is gone? And that person does not need to make any more money. Well, if you start to focus on that and your number one trades, you're going to start to see that a lot of the times right before we end up getting that trigger, that short-term person will get out. That doesn't mean that we need selling because so that's why, when we talk, it depends, but it really does, because if you think about something, is there always shorter term buying in a stock that's moving up? Or can stuff go up on nothing? Not always. So the way that we have to look at prints within this drawing of our number one that we have is we got to think about something. Now, once, did we just have that large buying? Okay, if it was just the buying at that increment above print personality, okay, at that point, I don't need selling for them to now bring the stock down to build. But I do need selling if I have a shorter term position that only needs to make 1 or 2 increments. Why would I need that selling? Well, because they told me they want to make money now. They want to make an increment or 2 increments, depending on how many prints there are off of print personality. Now, we can't be too much above print personality, because then what does that tell us? Well, that tells us it's not short term now. Okay, but if we're coming up and whatever, let's say the increment X, and increment X is right underneath, we get some off-level buying that's coming into it, and that person says, I need to make my money now, I have to assume that person's going to make their money first to then bring it back down to build. That person's position is the gas that's bringing it far away from where it needs to be. In that case, I need to see some selling versus a case where there's nothing but just the above print personality ask prints. In that case, I don't really need selling. So just by understanding what this chart, I know it looks so simple and it's just lines and stuff, but just by understanding the situations of where it is, I now know what type of prints I need to see. Because you don't always need selling. Sometimes you do need selling. Okay, it's going to be a situational based off the prints that are coming in at these spots. Now notice, have I said anything about prints down here at this increment or these lower increments? I swear this thing is so annoying. There we go. Oh, it disappeared again. Okay, but I haven't talked about anything like that because at this point, in a number one trade, I'm looking for specific areas. I'm not worried about everything else that happened. I'm worried about what part of the game or phase that this is in. It doesn't matter that we don't have numbers on the side, okay? But we can just start to understand where our higher percentage trades are going to end up coming from. We know that at this spot, the more increments that it goes up, the better off we're going to be for that move back towards the downside. So we can classify anything that's this basically above this level is a higher percentage trade. Higher. Anything above there. Now I want to start to talk about entries for a second because understanding a trade is also understanding how we're going to go about trading it. Where does my entry have to be high probability? Interesting. So Trevor said above the market maker. Above market maker original controlling prints, better than the market maker, one level away. Well, I don't know. I don't know. Good answer. Okay. No, it doesn't. Building is different. If let's just, this increment right here, this is the increment that we're using as dominant market maker, right? Can this build immediately from this increment? It absolutely can. 100%. So yes, we want to have a better entry than the market maker, but you got to think about something. Aren't we going to? Because the market maker is looking to build. Where's their entry coming from? Is their entry going to be long or short? They're bringing it down to build. It's going to be a long position. So essentially, I'm shorting it for them to go bring it down to go long. I'm technically going to have a better entry than them. It's a different trade, but I'm going to be way above where their entry is, depending on how many increments we're going to have to move. And we calculate that with our print personality. Okay? The better you are at trading where your level is, though, okay? Because now we have to take in you specifically. If your level is a lower level, what should you be looking for? What's your best spot? Above. And that's a stock getting far away from where it needs to be. But we have to understand something. Some of the best building trades are going to come immediately after we get those ask prints. This is like the epicenter right here. Okay, when you have the dominant market maker, everything's being controlled by here. Okay, this is a perfect case scenario because you got to think building. The perfect case would be there's no one looking to still go long because you want to go short. So perfect case would be that there is no more short-term buying or anything like that. It comes up, we get those above the ask prints, it comes back down, and then boom. Okay, and then we go to whatever our price target is based off of what our increment levels are going to be. Now we have the second part where now it starts getting further away from where it needs to be, and then our increments. Now let's talk about other variables, okay, which we're not using numbers, but now, okay, what are the things that can give our number one trade an even higher percentage? What can give our number one trades a higher percentage? Continuation prints. What do you mean by that? Well, that wouldn't change continuation prints or passing the baton. That would have nothing to do with the percent of our trade, would it? That would be trade management, not our trade. But yeah, it's psychological level. That's the biggest, biggest one is when you find a psychological level, okay, it's going to be a great spot to look at. Why? Well, we know there's certain spots where you gotta almost think of it like there's like this fence, okay, and there's a ton of people waiting. It's almost like Black Friday. When stock gets to over certain increments, and psychological levels are going to be one of those bigger ones where people are looking for, because they think when it goes above it, it's a support level, and and whatever, it's basically support and resistance type trading. You have a million people just waiting for it. Just waiting for it. If it gets above this level, now I'm in. This is where my entry is going to be. This is it. This is it. This is it. So those certain type of levels almost become super levels in taking money away. We want to see spots where we know there was a huge amount of interest that went in immediately for them to now drop it and take that interest immediately. Okay, so when we're looking at these number one trades, of psych level, that's one of those spots like we can almost guarantee there's going to be a lot of retail looking to make positions at that spot. Okay, our print lines. Why are our print lines so important to look for as a spot for a stock to then go into its building phase for number one? What's the psychology behind it? That's it. We know there's a market maker there. Okay, if we know there's a market maker there, it's always going to be a good spot for a reaction, for somebody to do something. Okay, so when we see that coming up, that's another great spot to look for our number one trades. Okay, all these variables that are coming in, but we really want to break it down again to behind the psychology of why the stock moves like this or why a number one happens. Okay, the longer, like I said, the longer that we have a stock going up, the higher the percentage that building is going to come in because they're able to get as much retail as possible. Okay, another thing that we want to look at, okay, is volume. We haven't talked about volume much in this yet, and we don't really need volume yet because we're going to assume that it's trading at a normal spot. Okay, but when I say volume, I almost mean tape speed. How many of you guys are looking at the normal tape, just our regular time in sales, when the stock is coming up to levels like this? We can tell a ton by how much retail we see coming into a certain area. So if we see that after these ask prints, we just start seeing tons of retail coming in over this increment, what does that tell us about the time frame we can expect for our number one trade to come in? We don't follow retail, but understanding when a lot of retail is coming in a number one trade is huge. Because again, building is to take money away. You have to think every building trade is essentially to steal shares from somebody else. That's someone else that's going to be on the losing side of a trade. Okay, and by understanding that a building trade is to take money away, okay, if they're going to take money away, do they want to do it a little bit at a time or as much as possible? They want the momentum. Okay. Look, there's not really an answer to that question because, again, it depends. It depends how big those controlling prints were in the first place. Because if they're huge, if they're way, 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 way above print personality, we're going to need a lot of retail. If they're basically like double or something like that, we're not going to need as much retail. So we're going to have to start being able to judge when we're looking for that perfect number one entry. We want to see they typically are going to drop the stock after a large influx of that retail's coming in. So you can call it volume, but almost volume without substance. And when I say no substance, yeah, there might be a lot of smaller prints, a lot of retail actually getting into it. And it's something that we want to look for. Just like we look for different market makers, because you have three market makers that are all lined up in this and with the same goal, the percent of that trade working out drastically increases because there's no way that you can have three wrong market makers. Okay, the same thing with that much retail. If we see that much retail get in, what percent, and again, we're just using percentages, what percent of retail traders make money? So when looking at a number one trade and looking for when they're ready to take that money, something big that we want to start to focus on, okay, when we get at two of those certain spots, is looking for large influxes of small prints, of retail prints coming into it. And I don't mean, like a burst of 5 or 6. I mean, we're talking about hundreds and thousands of shares, or, depending if it's only trading 100,000 shares a minute, then, but higher volume on a lot of smaller prints. That now gives us another idea that this is going to happen a lot quicker. And what's the reason that it's going to happen a lot quicker? There's more to take. So large influxes of retail mean about 90% of that retail is going to end up losing money. And when it fits into our number one trade. But we have to know the spots to look at. Okay, and the spots that we want to look at are, like I said, when we get over increments. Why do I say over increments and not under them? Why do I say over increments and not under them? Retail's attracted to up. Well, in this case, a number one trade, it's enticing people. Typically, a number one trade is going to look better at first to the upside, right? Exactly, Will. The resistance is now a support. So a large influx of retail isn't typically going to happen here. And if you see it, it's not really much. What they want to do is they want to bring it above, because now this support level from that increment is what's it creates that support. It's a reason for them to get in, because now they have that floor underneath them, or so they think. And then, as we all know, if you didn't know, if you ever traded before you knew the 1 through 4 setups, you get in over that spot, and then boom, you end up getting that beautiful trade to the downside, because in all reality, it was a number one. It wasn't a long trade to take above that spot. Okay, so we know any position that we take above where this dominant market maker is going, the higher the percentage is going to be. But at this point, we have our high percentage here. Okay, alone, just on prints and a trigger alone, we have at least 70%. And then we take in our other variables, like like I said, print lines, psychological levels, all the things that we're going to talk about with our calculations when we go live within our stocks. But again, I want to break these trades down 1 through 4 in the simplest form, and things that we guaranteed to know. Above here, we know it's a higher percentage. Okay, the longer that it's been able to go up, okay, the higher the chance of the number one is coming, because it has the ability to get more retail into it. That's what the psychology. It looks like two lines, one going up, one going down, but there's a lot of psychology that goes into each aspect of this. Well, we're going to do each one individually, but because there's different. Number one trade, everything that I just taught you here is not going to apply in the same ways in a number three trade. Number three trade is going to have completely different aspects. But we have to know what does it look like if it's perfect first, and from perfect, we can now start gauging what our trade looks like, or what the stock actually looks like. Okay, do we have any questions? See, number one trade is probably one of the simplest trades to take, because there's not much that needs to go into them. Okay, I want you to focus on what we talked about before when you go to start looking at stocks right now. When you see a stock that has ask prints way above print personality, I want you to start to focus. What is retail doing once it gets above there? Okay, I want you to focus. Is there shorter term position that's telling us that the stock only has the ability to get up to this increment? Well, that's where I'm going to be set up for my trigger to the downside, because once that gas runs out and that person's ready to go, not only is that person going to now be selling their shares, which is going to help the stock go down, but then the market maker comes in with them. It makes it even easier for them. So this is by far the least that goes into it. So the only time we need to see selling for number one is when they have someone shorter term underneath, or someone that comes in shorter term that says they still need to make their money. Yep. Otherwise, I don't need to see selling. Then they hop out and it's go time. Yeah, pretty simple. Now, are they going to, if they've printed 5 prints, are they going to get out of 5 prints at the same time? Probably, you're not going to just see, let's just make up a number, but 10,000 shares in, 10,000 shares out like that. But you want to see something that close to matches that shorter term making their money. Because then once they make their money, there's nothing left for them to have to really continue the stock, towards. And at that point now anything to the upside is running on it's basically a car running on fumes. And what happens? What a stock that's going up that has nothing left to have to go up towards, what's going to end up happening? Come right back down. Then you get that hammer, you get your perfect trigger, and boom, you're off to the races. All right. Do we have any questions? When we're going to do number 2 this afternoon, and I'm going to see if we can do 2 and 3, but you're going to see number 2 trade has a lot more that's going to be involved. A number 3 trade has way more involved, and a number 4 trade is kind of in the middle. Okay, but we need to understand what it looks like perfectly and understand the psychology behind it. So then when we pull up a stock that looks like it's setting up for a number 1, we know exactly what to look for. Okay, we want to see how much time has retail got, have they given retail the chance to be able to get into it? How much do we see them coming in over increments, so on and so forth? Go ahead, Trevor. So to clarify, looking at the unfiltered time and sales is key when approaching a level to see retail interest, which gives us insight of how fast the number will play out. Absolutely. Because if you don't see retail interest coming into a stock, now that leaves the market maker 2 options. What are the 2 options that leaves a market maker? If they're going to build, they need people to build from. They need to take money from other people, right? So they have 2 options. If we see no real retail interest coming into the stock, what are the 2 ways they can create that? They can extend the move, push it higher, because that's going to create, even though it's going higher, they can push it up. So is a consolidation going to interest, get retail all, I got to get into this because it's in a consolidation? Is that going to create a spark? No. So they can either push it up or they can do what? What else can they do? Only other thing, they can bring it down. Make it cost a lot less. Bring a stock down, start bringing it up a little bit, boom. Now it's at a cheaper price. Get more interest that way. How can we tell whether or not the stock will move through the level after hitting that level, or do we have to wait? How can we tell when we can take a number 1 if it's the level exactly then triggers down? I mean, it's based off your trigger. I'm not sure not sure exactly how you're asking that. And it won't come back to the level, it will go through it. Okay, so right here, think about that. Right here, if this stock comes up and we get a trigger, this damn thing is, and we get a trigger that comes down like this, right? Okay, where does our first price target have to be? Yeah, we know there's a giant market maker here. This is a dominant market maker, so we got to be ready right here. And if it triggers down right from it, well, that's it. We don't have to worry because now we're away from where the market maker is. Don't overthink it. Just literally, you got to play the setup. That's why getting far away from where it needs to be is always a higher percentage, because it's getting us further from where the dominant market maker is, because that's what we're following, is a dominant market maker in a number one. It's not a half-ass market maker. It's a dominant one. They're way above prim personality. They're showing you exactly what they're doing. This is the guy. So we know that this is going to be a rough spot. So we don't want it to go up 10 cents and then trigger into that spot. We want it to trigger underneath it if we're going to get in closer. Okay. And if we're far away, we want to make sure that we're looking right at that dominant market maker. That's where our first price target is going to have to be, even though we know it could go further, because this could play games in that area for 2 days. Our volume's also going to be a big indicator. There's, this is, again, we're breaking this down in a simple form so that when we move into it, we can start calculating exacts from there. And it's going to be situational, but in theory, this is exactly how it would be. Okay? If the stock, let's say it's over this increment and right there, you want it to trigger through underneath it. If it's above, we use that as our first price target. That's simple. And then from there, we're going to start to see prints. Again, if a number one is going to be a gigantic move down, we don't need selling. Are we going to see selling? Let's say it's going to move 3 increments down. You're going to see selling. So you're going to start to see those things coming in, those other intricacies that are added to it. Again, we're doing this without time and sales right now to understand every aspect of it. But time and sales doesn't lie. Stock doesn't move 3 increments without somebody making money. Make sense? Beautiful. Any more questions before we finish up? All right, beautiful. So we have Traders Exchange at 12:30, and I will see you all in the chat. Happy trading.